Correct. 77% of apparel, footwear, and home goods are still going to be impacted September 1.
All right, and it's certainly making an impact on the retail sector. If we pull up our first chart here, we can see the divergence between retail stocks all the way at the bottom, down 25% on the year, whereas the S&P is up. Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Edward Hertzman. He's the president and founder of Sourcing Journal. We're going to take a look at the real impact of tariffs on the retail space and the consumer. Edward, it's great to have you back with us.
Thank you.
Most apparel and footwear items, they're still going to be on that September 1st tariff list.
Absolutely. I think there's some confusion happening. The administration is trying to make it appear that they're trying to save Christmas and the holidays, but in fact, as it pertains to our industry, the apparel, footwear, and homes goods industry, 77% of products coming into this country from China will be taxed as of September 1st.
And they have already been bought. They're already going into the stores. It's not like this is going to save Christmas because the inventory is
already baked, and frankly, the goods coming in December 15th, those have already been bought. So both are really going to be impacted.
Well, I guess it's a good thing if you're TJ Maxx or Ross stores because you're going to get all of that overflow of the inventory. But let's take a look at our first chart. This is the retail sector, XRT down 25% on the year relative to the market, which is only up 1%. We can see that it's being impacted.
Yeah, honestly, I would have expected it to be worse. I mean, despite, other than the off-price sector, which you mentioned, which when times are good, people want a deal, and when times are bad, people need a deal, and a few of the sportswear companies like a Nike or Adidas, everything else is kind of downtrending in a major way. And I think that this is also because we're looking at, there's other headwinds other than trade, which is impacting this. It could be air freight costs that are increasing. It could be inventory levels that are inflated. It could be also other types of direct-to-consumer businesses or digitally native businesses that are eating away at this. I also think we have to look at the circular economy, whether it's Rent a Runway, StockX, the RealReal. These other players are taking market share for some of these traditional brick and mortar players, which is really having a massive impact.
Oh yeah, I can tell you my business, Rent the Runway, it's huge. It's been definitely a game changer. Now the issue is with these companies, and we're hearing this as we go through the earnings cycle, guidance is really tough to give. How are they navigating the uncertainty?
I think they like to say they have it under control, but the question is, what is the cost of uncertainty? So no, you could say it's 10% more for a tariff, but the point is, tariff or no tariff, people are having to spend a lot of money and time trying to mitigate these risks. So you have to put people on the ground, you have to do counter sourcing, you have to explore other countries. There's limited capacity elsewhere. So if you look at a country like Vietnam, we talked about this last time, they just don't have the capacity. So even if you move production elsewhere, you're going to have baked-in inflation throughout the supply chain. Secondly, if you try to, again, get ahead of these tariffs, and let's say air the goods in before September 1st or before December 15th, the cost of airing is much more expensive than boating the goods in. So there's so many different variables which, no matter how you look at it, are going to increase prices. And then if we look at your chart, as the stock market continues to go down, consumer confidence gets hit, discretionary income, people start spending less. So again, it's a trickle effect, which tariff or no tariff, I think it's going to be a not so happy Christmas for this sector.
All right, now opportunities for apparel and textile sourcing. If retailers aren't looking to China, Vietnam doesn't have the capacity, where else can they go?
So having said that, the number one winner of this will be Vietnam, because they have the proximity to the States. They also have the skill set. They also, it's just a natural fit. Bangladesh is going to pick up some of the capacity just because of the low-cost sourcing. India has the capacity. Obviously, as people look for speed-to-market opportunities, the Americas is going to be a natural fit. But again, we have to look at places that are vertically integrated, and a lot of these places are not, meaning that the beauty of China is the fabric, all the trims, the factories are all there. So it makes it very easy. When we start looking at some of these other countries, we still have to export the fabric from China to these countries. We have to cut and sew it there. So the lead times get really long, which is counterintuitive to everything we've been trying to achieve this past few years.
Yeah, I mean, if you just look at H&M down the street where you have that quick turnover in apparel, the obvious question is, how's that going to impact the consumer? Because if you have to start getting from China, have it made here, cut and sewn over there, costs are going to go up. Retail's a really thin margin business as it is. Where are those costs going to go?
Well, I think it's interesting. Macy's earlier this year tried to test with furniture and luggage, because those are some of the products that were hit earlier with tariffs. They tried raising the prices slightly to see the consumer's appetite. And what we saw was they did not have an appetite for this. So if we take the same formula and we apply it to apparel, the consumer really does not have much appetite for increased prices. So ultimately, the retailers and the wholesalers are going to have to eat this. The question is, how much can we spread the pain throughout the supply chain? How much can the factory take, the wholesaler take, the fabric supplier take? But ultimately, at the end of the day, the consumer will bear the biggest burden in this.
All right. Always great to talk to you. Thanks so much for joining us at MarketSite.
Thanks,
and
Jill.
thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.